If you have been following the financial markets over the past years, you will have noticed a growth in the number of financial products which claim to have an impact on non-financial factors, which are broadly referred to as ESG, which stands for environmental, social, and governance factors. This type of actions relies on private and public sources to, for example, improve the uptake of certain sustainable solutions, to cut greenhouse gas emissions, to reduce social inequalities, or to mitigate gender disparities. The bond market has been particularly active in this direction, attracting investors towards new financial instruments such as green bonds, sustainability-linked social and transition bonds. These type of bonds have recently gained great popularity among investors. Taking into account green bonds only, the number of issuances of this type of product has had a five-fold increase over the last 5 years only, and that's in the EU alone. To explore the reasons for the recent popularity of green bonds and sustainability-linked debt instruments, and to see what kind of impact they are having on the bond market, the Florence School of Banking and Finance has organized a training course entitled Green Bonds and the Sustainable Bond Market. This course will take place online and in Florence, Italy in September 2022. Today, we have the pleasure to discuss the origins, the opportunities, and the challenges of green bonds and sustainable finance with two of the course directors, Patrizia Canziani and Jan-Job de Vries Robbé. Patrizia, Jan-Job, it's a pleasure to have you here today.
Happy to be here. Thank you for the invitation.
Thank you. It's a pleasure to be here.
Thank you very much to both of you. Let me first turn over to Patrizia. Patrizia started her career as an economist, earning her PhD from MIT and going on to teach at the London School of Economics. She then moved on to investment banking, working for a number of banks, including JP Morgan, Deutsche Bank, and Merrill Lynch, and specializing in capital markets, structured finance, and financing. In recent years, she also specialized in sustainable finance and currently works as a sustainable financing consultant, assisting companies to raise green financings. So, Patrizia, you have worked in the capital market for now so many years. On the basis of your experience, I'd like to ask you two things. The first is, when would you say that green bonds started attracting the attention of investors? And the second would be, how would you define today sustainable finance?
Green bonds are a sustainable financial product. The first green bond was issued 15 years ago, but the real growth started after the Paris Agreement in 2016, when almost 200 countries signed the climate treaty and committed to a target long-term temperature to well below 2 degrees Celsius and preferably 1.5 degrees above pre-industrial levels. In order to meet the 1.5 degrees target, global carbon emissions should reach net zero emissions around mid-century or earlier. Many scientific studies explain why this is relevant, and this, of course, concerns most aspects of our lives. But if we zoom into finance, green bonds and sustainable finance in general have an important role to play. Finance is sustainable when it takes environmental, social, and governance (ESG) considerations into account when making investment decisions. It's estimated that $300 trillion investment will be required through to year 2050 on capital assets to get us to a net zero economy. That's an enormous financial commitment, and both public and private resources must be committed if we want to achieve the net zero target. We're going to talk more about this in the course, but in a nutshell, this is the reason why green bonds and sustainable finance are relevant, and green bonds volumes keep growing at an increasing speed.
That is indeed absolutely correct, and we will talk some more about the growth and the market reactions later in this podcast. But before that, let me turn on to our second guest, who is another expert in this field. JJ is a manager of legal affairs and a senior counsel at FMO, the Dutch Entrepreneurial Development Bank. He has worked on structured finance in Australia and the Netherlands, and for now more than 15 years, he has been involved in development finance and in what we call today sustainable finance. He has also a particular interest in sustainability litigation, corporate responsibility, and empowering sustainability in emerging markets. And he's also combining legal work with the teaching courses. So, JJ, would you mind saying more about your teaching activities?
Absolutely. Thank you, Jan. I'd say that teaching actually works best with your feet in the mud. And as a practitioner, it's been much easier to help students develop the skills to, in our case, analyze and critically assess finance products, and in this case, sustainability finance products. Over the years in working with students at Melbourne and Sydney University, I've been privileged to work with a highly diverse group of motivated students. And for me, I do my best to create an environment in which students are comfortable expressing themselves and learning from each other as well as from the faculty. If I look at the course that we're going to organize in Florence, then I think this is really a great opportunity to look under the hood of green and sustainable bonds. These are such exciting and meaningful products for us today. And it's also an opportunity to bring in different disciplines and perspectives. And my wish is for you to walk away not just knowing the strength, but also the improvement points of green and sustainable bonds and apply them in your practice and become a future leader in this field.
So, JJ, if I asked you to give to our listeners a teaser of what we will be discussing in the course, could you highlight one of the key points that you believe is important to consider when looking at green and sustainable bonds?
Yes, of course. I think a key theme is transition. To consider what transition is, how to make it possible, and to reflect on the success that the green bonds have already afforded us. It's amazing to see the success and the growth that this market has seen in such a short time frame. And I believe that green bonds will only become more and more important in the years to come when we will have an introduction of, say, green asset ratios. But next to this, I think the next chapter is the growth of what we now call sustainability-linked bonds, which are focusing on transition and making it possible for hard-to-abate sectors to transition to a credible and material way towards, for instance, net zero.
Thank you very much, JJ. And ahead of delving into some other topics that you have mentioned today, I'd like to continue first exploring how these types of bonds are nowadays expanding on the market. So, Patrizia, you mentioned the huge amount of investment that is required for the transition. How is the market responding to those needs? Do we see many green bonds transactions nowadays? And how does the market, like green bonds and other sustainable products, evolve?
Yes, Jan. Demand for green bonds is very high and keeps growing. Last year, in 2021 alone, more than $500 billion of green bonds were issued. Climate Bonds Initiative expects annual issuance of green bonds to exceed the $1 trillion milestone for the first time this year, and has predicted that $5 trillion will be issued in 2025, if the global economy is to remain on track to achieve net zero carbon emissions by 2050. Any entity with bonding authority can issue green bonds. Sovereign issuers, supranational institutions such as the World Bank and other public issuers dominate the market, but also private companies, both financial and non-financial, are major issuers. In 2021, these two, financial and non-financial corporates, accounted for 44% of all green bonds issued. In this course, we will also look at market trends. For many green bond transactions, investors' demand is a multiple of the amount of bonds being offered, and this translates into a pricing benefit for issuers, the so-called greenium. On the other hand, the rapid expansion of the green bond market poses a problem for both regulators and investors, who are concerned that it could encourage so-called greenwashing, whereby companies make exaggerated or false environmental claims in order to help them raise money from investors.
Thank you for this overview, Patrizia. On top of mentioning these numbers, I would like to invite you to share also with our listeners some concrete examples of actual green bond and sustainability-linked bond issuances. JJ, could you mention a few real-life examples of these types of bonds and explain why they are particularly relevant?
Yes, of course. During the course, we'll, of course, explore various examples from green, sustainable, social bonds, transition, but also sovereign bonds. But the one that I'd like you to perhaps give a think about ahead of the course is a recent sustainability-linked bond from H&M. And the reason for highlighting this particular one is that you can look at this product from two sides. On the one hand, the deal has got so much going for it. There's a financial reward if the company meets all its different KPIs and SPTs, that these are the particular targets, and these relate to environmental as well as social targets. And it's thus a deal that is truly, on the face of it, contributing to the SDGs 2030. On the other hand, there are also questions that you could and perhaps should be asking yourself to this and sustainability-linked bonds in more general. These could be relating to the underlying business model that, for instance, in this case is fast fashion, or whether there are any human rights issues in the value chain of a company, and how the company is actually defining net zero. So there are a range of underlying themes, and these are exactly what we'd like to explore with you during the course.
One thing that got me thinking is that in your previous comments and the examples you have raised, you both mentioned potential issues with the green bonds. So Patrizia, following JJ's case, can you give us an example of a green bond issued recently that caused particular concerns?
Yes, of course. An interesting example is related to the Hong Kong airport. In January, the Hong Kong Airport Authority raised $1 billion via a green bond tranche to help fund the development of a third runway. Climate change activists and environmental campaigners have strongly complained about the whole project. The airport expansion, of course, will increase the airport activity and so will increase carbon emissions. In addition, the project would pose further dangers to the habitat of Hong Kong's 37 remaining Chinese white dolphins that are already threatened with extinction. On the other hand, Hong Kong Airport has clarified that the proceeds from the green bond tranche will not be used to finance the construction of the runway. Those specific proceeds will instead be used according to the issuer's green bond framework and its pledge to make Hong Kong Airport, as they say, the world's greenest airport. So the issuer has ticked all the boxes. The green bond tranche has been issued in line with their sustainable finance framework, and this was also confirmed by an independent second-party opinion from Sustainalytics. Supporters of this bond also point out that although air travel undeniably contributes to carbon emissions, demand for air travel is not driven by whether an airport operator constructs a new runway. The green bond tranche makes sense because the issuer is investing in areas to mitigate the impact of their operations on the environment. Examples like this one show that path to net zero is a gradual process and it takes time, and we are bound to encounter many gray areas. And this example is also relevant because despite claims that airports are the antithesis of green borrowers because of the nature of their business, other airports around the world have successfully marketed sustainable debt. Last year, South Korea's Incheon International Airport sold a US dollar green bond, and also Italian Aeroporti di Roma issued sustainability-linked bonds. In this course, we will look at many more real-world examples of green bonds and other sustainable finance products.
Indeed, this course will indeed give us plenty of space to explore other examples, also by offering to our participants the chance to work on them as case studies. But moving to a slightly different perspective, I'd like to explore how ESG ratings are evolving nowadays to accommodate all the practices we've been mentioning since the start of this podcast. JJ, would you mind shedding a light on this, in particular on how ESG ratings are evolving nowadays?
Yes, of course. Thank you, Jan. I think my first reflection is that ESG ratings are a bit like the sequel of Top Gun. They look great on the screen, but it may be obvious to everyone that it's not the real thing. But having said that, I think ESG ratings, like many things, they have two sides. I mean, you can both disregard and use them at your peril. I believe it's quite clear that they fulfill a very important role in bridging the asymmetry of information between issuers and investors on all matters that are relating to ESGs. So in this sense, they fulfill a useful role in the debt capital markets. Having said that, there's also criticism of ESG ratings, and that reflects the arguably lack of transparency in some of its methodology and all the different elements that are part of the ratings. And this exposes investors and issuers to a certain degree of uncertainty. And of course, apart from that, there's a sense of perhaps history repeating itself. People are looking at ESG ratings in the same way that they perhaps looked at credit ratings 15 years ago. So from my personal perspective, it is understandable that supervisors like ESMA are putting regulation of ESG ratings and similar products on the table. And to me, I think that's really a positive development in the interest of investor protection. Having said that, that's just my view. I believe the purpose of the course that we're working on with you is to give you a divergence of perspectives, different insights into what these products can actually mean and how they can assist investors. But we'd also like to share with you some of the tools that will help you to negotiate, for instance, when you review a second opinion on behalf of an issuer or an investor.
Thank you, JJ. I particularly liked that you introduced a different perspective to the discussion, that of an investor. And Patrizia, can I ask you to elaborate more on how do investors react to these new products and maybe point out if there are any potential issues that they should be aware of?
Yes, of course. We mentioned that investors' demand for sustainable investments, such as green bonds, is very high, pushed both by regulators and by the growing awareness of the whole society. Even the latter, the civil society, should not be understated. And an increasing number of people contact their pension fund manager, they inquire how their pension money is invested, how much in sustainable assets, and other details. And of course, that pushes the pension manager and their investment. On the one hand, it's almost too easy to give up when you look at the press. You know, the house is on fire, solutions are new, different tools and methodologies still in some cases lead to different results, lack of standardization, pockets of resistance, greenwashing, and other issues, you name it. It's confusing, it's moving fast, and it's somewhat scary. In a way, it's easy to put it to one side and forget about it. On the other hand, unfortunately, a lot of progress has been made. Methodologies converge, or at least there is a common understanding that they'll have to converge more and more. As the sustainable market grows, also the regulators' and investors' awareness of potential pitfalls grows. Activist investors play their role, and it's very important. Standards are reinforced, and so on. The fact that issues such as greenwashing are frequently discussed in the press and that courses like ours look at it and at possible mitigants is already a very good sign. As always, agreeing that there is an issue is the first step to work out solutions. In conclusion, many investors are active players in the sustainable financial markets, and the number of participants keeps growing. It's an important and growing part of the financial market. It's a new, dynamic, and complex market. In this course, we'll look at its main components and participants, and we'll have the opportunity to ponder strengths and issues and analyze case studies. I'm looking forward to it.
Many thanks, Patrizia. Same here. But before tuning out, I would like to introduce one final topic, that of regulation, which was briefly mentioned by JJ already. So, JJ, how is the regulatory framework responding around these new products? Could you please outline the current evolutionary trends?
Yes, Jan, of course I can. I mean, there's probably too many to discuss in this brief podcast, but I'd say there's two things that really come to mind. The first one is it's really incredible how quickly this regulatory space is developing. To anyone who's following this, we've seen green, amber, social taxonomies, we've seen regulation for sustainable finance disclosure, and also the level of detail that what we're seeing is unique in the world. The EU might be the most advanced in this respect, but the question that we can be asking is, will it actually work? Will we be setting the global standard and eliminating greenwashing? Of course, we're seeing some moves across the Atlantic finally too, in terms of disclosure requirements, but it's all not without its challenges. And a link that I'd like to make is to sustainable finance in developing countries. Because if we were to apply our perspective simply on them, then it's going to be quite a challenge. It's going to be quite a challenge for developing countries and corporates and issuers to work and align their practices with ours. So perhaps one of the things that we can look at is to see what the approaches that developing countries have instead and learn from them. So that was my first point. And the second point is that we're seeing a move from soft to hard law. I find that a really empowering thought. The sustainable finance space is one which is defined by many different initiatives. And part of these are actually bottom-up on the basis of lobby organizations, but are really driven by people like you and me. And that's really a thought that I wanted to share with you, that we're all part of this change of regulation in the sustainable finance sphere.
So thank you very much, JJ, for sharing this insight. Is there a final question that you would like to raise to our listeners?
Yes, absolutely. Thank you. My challenge, or perhaps key question to you listening and considering to attending this course, would be to think through what it really means to you to make a bond genuinely sustainable. Because this will be the starting for our discussion when we get together in Florence, and to hopefully come away with a fruitful definition and also application for sustainable finance and sustainable bonds in particular. Looking forward to meet you in Florence. See you then.
Indeed, thank you very much, JJ. We look forward to hosting you and Patrizia in occasion of the course Green Bonds and the Sustainable Bond Market. This course will start on the 5th of September with the first online modules. Then we will all meet here at European University Institute in Florence between the 21st and the 23rd of September for the in-person part of the course. And finally, it will be closed by online sessions ending on the 30th of September. To register, just visit our website fbf.eui.eu and sign up for the course before the registration deadline on the 31st of August. So register at your earliest convenience and get a ticket to Florence. We look forward to continuing the discussions we started in this podcast with the members of the course faculty and, of course, and very much importantly, with all of you. Goodbye. Thank you for having listened to this podcast by the Florence School of Banking and Finance. For more information and to listen to all our podcasts, visit the webpage fbf.ui.eu.